Over the last few decades, China has made impressive strides in the development of its rail infrastructure, with a high-speed rail network that spans thousands of miles and connects many of the country's major cities. While this infrastructure has been lauded for its efficiency and speed, there are concerns that China's rail development may not be long-term. In this video, we will look at the reasons for these concerns as well as the difficulties that China may face in maintaining its impressive rail network. China's rapid expansion of rail infrastructure has resulted in a number of environmental issues, including air pollution and habitat destruction. China is the world's largest consumer and producer of coal, and coal-fired power plants contribute significantly to the country's energy mix. This reliance on coal has resulted in significant air pollution, endangering public health. Although high-speed trains are often promoted as a more environmentally friendly alternative to flying, they still require significant amounts of energy to operate, which can result in greenhouse gas and other pollutant emissions. In response to these environmental concerns, China's government has taken steps to reduce its reliance on coal and promote the use of cleaner energy sources. For example, the country has made significant investments in renewable energy, such as wind and solar power, and has implemented stricter air pollution regulations. However, clean energy development remains a long way off. Aside from air pollution, rail line construction frequently involves the clearing of large areas of land, which can result in the destruction of natural habitats and the displacement of local communities. Many of China's rail lines are constructed in remote or mountainous areas that are frequently home to endangered species and other sensitive ecosystems. Rail line construction can also disrupt wildlife migration patterns and contribute to soil erosion and other environmental issues. China's rail development has largely been funded by debt, with estimates indicating that the country's total rail debt may exceed $1 trillion. While this debt has allowed China to build a large high-speed rail network in a relatively short period of time, it also raises concerns about the country's rail expansion's long-term viability. One source of concern is the potential impact of a recession or a slowdown in rail usage. If rail usage falls or the economy suffers a downturn, China's rail debt may become more difficult to service. This could force the government to raise taxes or cut spending on other programs to cover the cost of debt servicing, which could have a negative impact on the economy and society as a whole. Furthermore, China's high rail debt may limit the country's ability to invest in areas such as education, healthcare, and social welfare. If the government's budget is dominated by debt service, it may be difficult to devote sufficient resources to other critical areas. It may aggravate the country's debt problems because the government may struggle to generate enough revenue to cover the cost of servicing the debt associated with underutilized rail infrastructure. Rapid rail expansion in China has resulted in significant overcapacity in the country's rail network, with some estimates claiming that up to 60% of China's rail capacity is currently underutilized. This overcapacity has raised concerns about China's rail infrastructure's economic viability, especially given the high levels of debt used to finance its construction. There are several reasons why China's rail network is overcrowded. One reason is that the government has prioritized new rail lines over upgrading existing ones, resulting in route duplication and inefficient resource use. Furthermore, many of China's rail lines were built with the expectation of high demand, but that demand has not materialized in some cases. For example, if a rail line is only half full, the government is effectively wasting half of the resources invested in building and maintaining the line. Second, it may result in a drop in service quality because operators may be less motivated to provide high-quality service if they are not competing with other providers. Third, it may make it more difficult for the government to service its debt because the revenue generated by underutilized rail infrastructure may not be sufficient to cover the cost of debt servicing. Many of China's rail projects were built to promote economic development rather than to generate profits. This has raised concerns about the long-term economic viability of China's rail network, particularly if these projects fail to generate enough revenue to cover their costs. Several factors contribute to the lack of profitability in China's rail projects. For starters, many of the rail lines were constructed in remote or underdeveloped areas where there may not be enough demand to support the high capital costs of building and maintaining the infrastructure. Second, some rail projects were constructed with the intention of connecting regions or promoting tourism rather than generating revenue. Finally, many of these projects have been subsidized by the Chinese government, allowing them to be built without regard for profitability. If China is unable to service its debt, it may be forced to curtail or postpone rail development. This could result in a decrease in the quality and availability of rail service, which would be detrimental to the country's economy and overall development. This could set off a vicious cycle in which the government is pressured to incur more debt to fund unprofitable rail projects, making debt service even more difficult. The Chinese government must take steps to ensure that its rail projects are financially sustainable and generate enough revenue to cover their costs. This could include scaling back new projects, encouraging private investment in rail infrastructure, and investigating the possibility of privatizing existing rail infrastructure. And that's all for today's video. This is Visionomics, signing out.